One reason, real quick, you might not want to consolidate, though, for a lot of the individuals we're talking to, you don't want your payment to change in the next year. You want to drag that out as long as possible. And consolidating is going to force you to certify your income. So you're going to get a higher payment likely than you would have back in March of 2020.
There's a small change here on consolidation.
Oh, yeah. Consolidating loans now is not going to reset your clock at zero payments. It used to be consolidating out of your old direct loans or out of your old direct loans would, let's say you had 50 payments, 5 year, 4 years in the books. And you're like, I'll do a consolidation and get loan number 6 out of 5, put on there too. And then your 50 payments went to zero, no more payment progress. And it was devastating to
Yeah.
those that's happened to.
And
Going forward, it'll be the weighted average of the payment history. So, if you had 3 loans that had five
oh, okay.
payments and 10 loans with it depends on the balance in the loans and they throw it
That's
all.
just like they do with the interest rate.
It's just like the interest rate where it gets averaged out with a weighted average. And
Mm.
so you'd have a weighted average of that. So you wouldn't have the longest payment history, but it wouldn't be reset at zero either.
I could see that becoming a problem
That's still worth analyzing if you're in that
because if you have a
situation.
big loan with a really long or a large amount of qualifying payments and then a really tiny loan with like one and you consolidate, I don't know how they do the weighting. I guess it depends on how they do the weighted
It is weighted
calculation.
based on the balance. So
Okay.
it would
That's
pull
not
that small loan significantly further ahead than it would pull the big loans back. But if you don't want that to be you, if you don't even want to have to worry about that calculation, we still have this year an IDR account adjustment so that if you have these consolidated loans or anything before the end of the year, the longest payment history counts. So it kind of takes the combination of the two and throws it together. But that's a very time limited
you
change.
just need to do that before the end of the year.
The end of the year.
Okay. And that's important for if you're going for 20 or 25-year forgiveness, right?
It's important for 20 or 25. It also applies to PSLF.
Or PSLF. Hopefully you've already done that where you've consolidated to get the longer of the repayment histories, qualifying payments. But yeah, you have until the end of the year to do that. That got extended, right? A couple times.
So, yes, that did get extended. It was originally set to be done here early this. It was in this spring and it got
Mhm.
pushed back to summer and then finally to the end of the year.
So who is that important for? If I'm listening to this and who is it? Who are some of the people that we should, I know FFEL loans is one.
So, yes, there are really kind of two major cases I can think of right now that you may want to get on that consolidation before the end of the year. And that would be one, if you have the old FFEL loans, the ones that were before the direct loan program was really in full swing, or Perkins loans, and you want to get credit towards PSLF or long term forgiveness, those need to have a consolidation
Mhm.
application anyway in place by the end of the year. And so that would get all of those loans eligible for PSLF versus, direct loans being eligible, FFEL loans not. So that's one reason you might consolidate here by the end of the year. Another case, and this has been an interesting one, is with all the adjustments. And so I guess real quick, those adjustments were that basically any payment and under any plan and even some forbearance and deferment periods are counting towards PSLF and long-term forgiveness. And so that's really added to the count that a lot of individuals have towards forgiveness. But if you have a loan that has a really long payment history, case study example would be a couple I can think of right now that have been paying on their student loans since 1999, on old income driven plans. And so they've got a lot of payment history there. They are now eligible for those loans to be forgiven under the 25-year payment
Mm.
program. But they also are now at the point. So if you had loans that long, they're as old as your kids, right? Maybe older. You may also have kids. So in this case, maybe you have kids and you've taken out plus loans for the kids. You could consolidate those loans by the end of the year. And the loans that had the 20 or 23 years of history about ready to be forgiven get applied to the history of those brand new loans. One reason, real quick, you might not want to consolidate, though, would be you mentioned this right at the beginning, Daniel, is for a lot of the individuals we're talking to, you don't want your payment to change in the next year. You want to drag that out as long as possible. And consolidating is going to force you to certify your income. So you're going to get a higher payment likely than you would have back in March of 2020.
Mhm.
So
Yeah.
if it's only one payment difference, may or may not be worthwhile.
It really gets complicated, but you have to weigh the advantages of this potential consolidation and using this oldest payment versus the costs of having a higher payment.
But yeah, those are the two cases. If you've got old
Mhm.
loans that wouldn't qualify for PSLF or any other type of forgiveness, it may be worthwhile to look into it. And if you have really old and really new loans, also a good opportunity to look at it at least.